Today, Bitcoin and Ether tumble to begin the week. The Fed scraps a program viewed as anti-crypto, and Caitlin Long, the CEO of Custodia Bank, which is based in Wyoming, sits down with us at the Wyoming Blockchain Symposium to discuss regulatory developments for crypto. Welcome to CNBC's Crypto World. I'm Talia Kaplan here in Jackson Hole for the second annual Wyoming Blockchain Symposium. Attendance doubled this year amid a more crypto-friendly administration and progress for crypto on Capitol Hill. Now, this event is taking place the same week as the annual Jackson Hole Economic Policy Symposium hosted by the Federal Reserve Bank of Kansas City. And this year, two members of the Fed will attend this conference. They include Christopher Waller, member of the Board of Governors of the Fed, and Michelle Bowman, Vice Chair of Supervision of the Board of Governors of the Fed. Also in attendance this year, many industry executives, lawmakers, and regulators, including SEC Chair Paul Atkins, who will be addressing the audience tomorrow morning. We'll have more on the Wyoming Blockchain Symposium in just a bit, but first, let's get a check of the markets. Crypto prices in the red to kick off the week as heightened macro concerns triggered more than $500 million in forced selling of long positions. As of noon Eastern, Bitcoin fell less than 2% to $116,200 after falling as low as $114,700 at one point. This after touching a new all-time high last week, its fourth one this year. Ether dropped nearly 5%, but still traded above $4,300, and XRP fell 3.8% to $3. Both Bitcoin and Ether rolled over after higher than expected July wholesale inflation data raised concerns over a Fed rate cut in September. Also, profit-taking from investors sparked a wave of liquidations across the crypto market. Taking a quick look at a crypto-focused stock, Tom Lee's Ether company BitMine dropped more than 2%. The move lower came after the Bitcoin miner that pivoted to an Ether treasury strategy notified the SEC in a filing that it was doubling down on its stock sale program in an effort to raise up to $20 billion to buy more ETH. Okay, let's talk about the top stories. Crypto platform Gemini entered a credit agreement with Ripple Labs. A Friday SEC filing reveals Gemini can initially borrow up to $75 million with the option to decrease or increase the amount to up to $150 million. Requests made beyond that cap may be made with Ripple's stablecoin. The credit line will bear an interest rate of up to 8.5%. Now, this comes after Gemini, founded by the Winklevoss twins, confidentially filed for an IPO back in June. The same filing from Friday reveals the platform's mid-year total liabilities were more than $2 billion. Next, the Federal Reserve is shifting its supervision practices on crypto. On Friday, it announced the board decided to toss what it called novel activities, a practice it used to supervise banks on certain crypto and fintech activities. The Fed says since that program was implemented, quote, the board has strengthened its understanding of those activities, related risks, and bank risk management practices. Friday's announcement says supervision of those activities will fall under the standard supervisory processes. All right, back to the Wyoming Blockchain Symposium for our main story. This morning, I sat down with Caitlin Long, founder and CEO of Custodia Bank, which specializes in crypto and is based here in Wyoming. We discussed the Fed's shifting stance on crypto, as well as bank-issued stablecoins, especially now that the Genius Act stablecoin regulation bill was signed into law last month. Caitlin Long with Custodia Bank, thank you very much for joining us here in Wyoming.
Talia, welcome back to Wyoming. I know you started your TV career here, so welcome back.
Thank you so much. It's amazing to be back. It's such a full circle moment, and we're here obviously at the Wyoming Blockchain Symposium. It's taking place the same time as the Fed's annual Jackson Hole meeting. And so I'm curious for your take on the timing of this event and the Fed meeting. This year, we're actually seeing some members of the Fed participating in the Wyoming Blockchain Symposium, as well as lawmakers and regulators, including SEC Chair Paul Atkins and key industry players like yourself. So what are you expecting at this year's symposium, and how is it different this year compared to last?
Well, it's the second annual. Last year, it was, well, backing up, it was Anthony Scaramucci's idea to troll the Fed because, of course, they come every year to the Kansas City Jackson Hole symposium that happens to be here. And so Anthony came to me a couple of years ago with the request to work on this together with the University of Wyoming to troll the Fed. And it's amazing how much things have flipped. Last year, there was no one at the Fed who was allowed to attend. We found out the general counsel disinvited everyone at the Fed who was signed up to attend. This year we have 2 Fed governors, the most important 2 for our industry, Mickey Bowman, who's the vice chair for supervision, and Chris Waller, who is the head of the Fed's payments committee. Those are the 2 most relevant Fed governors in terms of their remits. And they're both here and they're both speaking right before the Jackson Hole Symposium. It's amazing, the turn of events.
Now, last time you spoke with CNBC was last month, and you noted you're seeing a change of stance from the Fed. In fact, we recently learned that the Fed decided to toss a practice used to supervise banks on certain crypto and fintech activities. And when you were on CNBC last month, you noted that you currently have a bank charter, yes, but Custodia is waiting on a clearing account from the Fed. You have an application with them, and you've been waiting for more than 5 years. You also noted that there are 40 applications for Fed clearing accounts. So are you more optimistic now that Custodia Bank will finally be granted that clearing account from the Fed, especially given this change of stance from the Fed that you speak of?
Well, optimistic, yes, but nothing's happened yet, nothing's changed. The Fed is still the last mile. The other regulators, of course, you mentioned the SEC, the CFTC, and then, of course, the other bank regulators, FDIC and OCC, have backed way off their Biden-era anti-crypto policies. The Fed has backed partially off, but has not reversed all of them and has not let any of us have clearing accounts yet. So clearly there have been major personnel changes. Personnel is policy, there's no question. Things are thawing, but they're not completely melted yet at the Fed.
Now, obviously, a big topic here at the Wyoming Blockchain Symposium, crypto regulation. We have seen huge milestones for crypto regulation here in the U.S. Just last month, the Genius Act stablecoin regulation bill was signed into law, and now there's a federal framework for stablecoins. We're seeing a lot of interest from banks trying to issue stablecoins. I know when you spoke with CNBC, you noted that Custodia Bank has a patent for bank-issued stablecoins that was approved back in 2020. You applied for it 2022. You applied for it in 2020.
Correct.
So at the time when you spoke with CNBC last month, you noted that you were gearing up to go after the patent infringers. Now that the Genius Act stablecoin regulation bill is law, are you taking action? Are you starting to move in that direction? Where does all of that stand?
Yes, there are two things we're doing. One is, yes, we are moving to defend our intellectual property, but we are also advancing our partnership with Vantage Bank. We issued the first bank-issued stablecoin back in March. We put out 3 different press releases related to transactions that we did with regulators' approval. We don't act unless the regulators have approved. It is a little different than the rest of the industry that was asking for forgiveness, not permission. We ask for permission, not forgiveness. So things are moving more slowly, clearly, in the banking industry because we have to wait for permission. It's just our policy. And I think in the end, that will have paid off for us because we are, with Vantage, working very closely with the federal regulators. And stay tuned because we're pretty close to making some announcements about bringing this technology to the banks for tokenized bank deposits together with Vantage Bank. We have a lot of banks interested in joining us, and we'll have a lot more to say about this soon, but what we're bringing is a license to use that patent for the banks that join us.
And I look forward to hearing that announcement once you're able to disclose. But what has changed for the industry since the Genius Act became law, just generally speaking?
Well, we're all trying to figure out what it means. The bank regulators have to put out rules, and that's going to take at least 6 months, optimistically, probably longer. And so we're waiting to see some really major decisions. Can banks issue tokenized bank deposits? If banks own stable coins, what is the capital charge that the banks have for owning the stable coins? Those questions have not been answered yet. And there's another major one, which is the compliance piece. So much of the non-bank activity, with the fintech specifically in the crypto industry, is not up to bank standards of compliance. And I don't believe that the bank regulators will have a 2-tier system where the banks will have stronger compliance requirements than the non-banks. That puts the banks at a competitive disadvantage. But right now, that's exactly what the system is. And so I believe that the Fed and the OCC and the FDIC will clarify that there is a level playing field. But there's a big open question. If someone volleys a tokenized bank deposit from Bank A to Bank B, does that Bank B customer have to have been onboarded at Bank A? And right now, that is an ambiguity that the bank regulators have not answered yet within the fintech space, because the compliance requirements are not as strong. That just hasn't been an issue. But like I predicted, we will see a leveling of those compliance requirements. And frankly, that will be wonderful news for the community banks, because they've been just absolutely buried by compliance costs. Small banks, it's crazy in a small town. You spent time in Wyoming, you know, everybody knows each other.
Absolutely.
And so to make a small community bank have to get their neighbor's driver's license in order to be able to open an account or send a wire seems a little crazy, seems a little excessive, and it is for community banks. And so I think what will happen is there will be an ability for banks to share that information with each other. That currently does not happen, but I do believe that that is on the bank regulators' radar screen, and it will be a positive for everybody. There will be a lot less friction in using the banking system and using fintechs when that is all clarified.
And it will be very interesting to see if that does in fact happen. Right now, obviously, all eyes are on the Clarity Act, which essentially lays out the rules of the road for crypto. And the House passed the Clarity Act last month. Now it moves on to the Senate. What do you think happens there? Do you think that it will in fact pass the Senate in its current form? And if it does, what will change for the industry? Will anything change for Custodia Bank?
Well, for Custodia, no, because we're focused on stablecoins. So for us, the Genius Act was the most important one. For those that like, for example, Kraken, a sponsor of this event, more focused on the exchange aspect, not on stablecoins, the Clarity Act matters more to them. But I do believe it will pass. It won't be the House version. There is the Senate is doing a rewrite. It'll be interesting to see what ends up happening. Will it be the Senate version or the House version that ultimately gets signed into law? But President Trump has indicated that he wants the Clarity Act signed into law before the end of the year. And his son, Eric Trump, is coming to this event, one of the speakers at this event. So I do expect that Clarity will pass. I just don't know exactly yet what it will look like.
Okay, that's all for Crypto World today. We'll be back again tomorrow with more coverage of the Wyoming Blockchain Symposium, and we look forward to seeing you then.